Hello, Red Scary.
Hello, can you hear me?
Hey, what's up?
Oh, hold on. I had to mute you on the stream. That was sounded
We got an
crazy.
echo.
Well, just I have headphones on, so it's just like anyway. I'm good now.
Okay. What is going on? What's going on, Red Scary?
January is like crazy busy. I feel like in public works because like nobody wants to do anything in the holidays, so they're always like, "Oh, we'll get to it in January," and then January gets here and we have like 2 months of work to do. So
Yeah.
it's been kind of busy, but whatever.
Well, I appreciate you taking some time to help break down some of this stuff for us.
Of course, anytime.
So what kind of research have you been doing? You're still in the Financial Times. You're looking at what speech were you watching the other day? Like, what have you been? The main, like you said, the main thing that you kind of bring to the table with these discussions is you're willing to do the work to read what these like economy people, these like robed clerics or whatever that interpret these sacred lines and numbers, determining what they're up to. So what have you been looking at lately to try and get to the bottom of this stuff?
Yeah, so I maintained my ungodly expensive Financial Times subscription. I can't make myself pay for Bloomberg, so I'm still getting to Bloomberg articles through archive, uh like looking for an archive of the article I want to read and doing it that way, which is the thing you can do. Anyone, if you want to read Bloomberg
Yeah.
or Financial Times, just go right to that archive site, look for where it's been archived.
As I was
Yeah,
outlining, I have such a hard time reading stuff that I'm like interested in that makes me like feel good. So I have a really hard time with that.
okay, so you're saying reading Bloomberg doesn't make you feel good?
No,
Make you feel
it makes me feel actively bad. Yeah.
I see. Okay.
But I do agree that it's
Um,
important to know about though, what these
and then
ghouls are saying to each other.
there's this blog, Michael Roberts' blog, The Next Recession, and he writes like great blog posts. He's like actually a Marxist. So I actually pulled a bunch of stuff from inflation from one of his blog posts for this. Um,
Oh, cool.
that's mostly. Yeah, I only go to like the Fed's website if I want to I literally want to find Jay Powell's most recent speech, or I want to look at like I don't know, a graph of the M1 money supply or something very
Yeah.
specific. So,
Okay. Okay. Well, like as always, like my questions about this stuff are always the same. And I always go back to like right before the pandemic. Like it's felt like we've been on the verge of economic collapse for a while. The bubble popping, the housing bubble, the tech bubble, all the various bubbles that we're kind of in right now. And I've just been kind of waiting for the other shoe to drop. And at the beginning of the pandemic, it really felt like that moment had come, like it was happening. They pulled some crazy trickery with injecting, trillions of dollars into the Fed, into the market to try and stabilize it, which kind of worked. So it's felt ever since like that time that we've been just on the verge of this shifting any moment now, you know?
yeah, I'm always one of the I feel like anybody who reads the Financial Times for fun always thinks a recession is coming all the time. At least that's me. Like, I don't know, like my husband makes fun of me because he's like, "You always think that we're about to have a recession," but I do. And it's
It was
because
good cause.
you can see like that what you're talking about, right? In March 2020, you had a complete freeze basically of no bank being willing to trade overnight with another bank, which can't that is a condition that if just left on its own can cause a financial collapse, because banks can get they don't have enough money to pay out their withdrawals the next day, then that is an insolvent bank,
Yeah.
right? Um,
That's the Ponzi scheme, like all collapsing, right?
yeah, and like if the Fed had not started injecting $120 billion of cash into the economy every month and immediately dropped the interest rate at which banks lend money to each other overnight, literally to zero, from 2.5%, then yeah, I mean that could have triggered a financial collapse. It's only because of the extraordinary intervention that the Fed took in March of 2020 that prevented that from happening. And so, like that was something that was very kind of isolated and they were able to fix it, right? But of course, like Yeah, I kinda wanted to, it's been a while since I've been on, I kinda wanted to remind people, I don't wanna just, like I read all about the interest rate and all this stuff all the time, so I wanted to kinda remind people of, like, kinda lay out, like, what has happened and, like, what the central bank, the Fed, has been doing.
Yes, please do.
And so, like, when we talk about, like, the interest rate, right? Like, when you say, "Oh, they did an interest rate hike, they did an interest rate hike." That's a very specific interest rate on the Fed funds rate, which is just, like I said, it's the overnight lending rate between banks that are trading Federal Reserve funds, which are, like, funds that are, backed by the Federal Reserve or that come directly from the Federal Reserve, like, when they were putting in that $120 billion a month. So basically, like, if I'm at Wells Fargo and I had a lot of deposits today, and my friend over at Chase has a lot of withdrawals scheduled for tomorrow, I can lend them money overnight at the interest rate that is set by the Fed. And so any other loans that I make for cars or mortgages or to take a social media company private, I'm gonna like kind of base that on the rate that I'm borrowing, right? So if the rate that I'm borrowing goes up, then all these other rates go up too. Now, there was an interesting story actually just this morning on the Financial Times about JP Morgan saying that so far they have raised the interest rates of their loans, but they have not raised their dividends to savings accounts. And because of a recent shortfall in savings accounts, they are going to have to raise the savings account rates to incentivize people to actually put money in the banks, which is very interesting because that
Hmm.
hasn't happened for years. So the first time I came on was back in April, the famous lost episode.
Yes, which I
If you missed it,
accidentally deleted. Yeah.
that'll teach you to miss a stream
Yeah.
live. And back then, the Fed had literally just done one interest rate increase since they took it back down to 0 in March of 2020. And at that time, I was looking back at my notes, like, the most, like, crazy, like, insane, guesses for what the interest rate would be at the end of 2022 was 3%, and people were like, "That would be so crazy, like, that would be so aggressive." And as it turns out, like, they weren't crazy enough because the actual federal funds rate at the end of 2022 was 4.25% after they did what they called a jumbo increase of increasing it 0.5% one time, and then after that, a consecutive raises of 0.75%, which they had not even been talking about doing. So, like, it's really the change in the interest rate, and so the rate of all borrowing basically across the financial system has been really extreme, and has changed super, super, super fast. And so I think, like, a lot of the things that we've seen in the last year that have been really crazy, like the whole crypto collapse, or there's been a bunch of, like, really insane, like, events that happened last year that probably did not catch most people's eye, even though they were, like, eye-popping in, like, business press. That is literally, like, a lot of investment strategies that relied on debt and leverage and trading on leverage, that are kind of like the problems with that in a new environment, is really kind of showing through. The other thing I wanted to say, sorry, this is, like, really long-winded, but
No,
I
this is
I just
good.
kinda wanna ground everybody in, like, what happened and kinda where we're at now. Back in April, the Fed was kind of hemming and hawing a lot about the labor issue, and they were still talking about a soft landing, and they were kinda downplaying unemployment rates as being a major factor that they were thinking about in their decision making around the interest rates, and trying to, like, get inflation down. And so this is why I was looking at Jay Powell's recent speech from November called literally Labor and Inflation. Um, so in that speech, they are staying dedicated to getting inflation down to 2%. That's the number that's in the Fed's mandate. That's the number that they're going to continue targeting. So until you see the reports that come out about inflation, like getting down to and staying to 2%, you can expect the Fed to kinda keep raising rates or talking about raising rates. And they're certainly not gonna start dropping them, which is what the stock market wants. And now they're kinda saying the quiet part out loud, which is that unemployment is too low. There are too many people have jobs,
Yeah.
um, and they're kind of attributing this to a labor supply shortfall, which is caused by a combination of excess retirements from COVID, deaths, 'cause, like, a bunch of people did die, lower immigrations, and then low birth rates. And the Fed is maintaining explicitly that the current wage growth is above levels that correspond to an inflation rate of 2%. So they're saying, like, until this unemployment number goes up, we're not going to stop raising interest rates and slowing the economy down. So, they're going to keep raising the rates, probably slower than they have been if the inflation numbers from December kind of continue. And at minimum, they're going to hold the interest rates high. And so, like I was kind of saying, we've already seen some of the changes from this low interest, cheap debt environment to the current environment, which has had insane changes and trends, like the devaluing of growth stocks, which is tech stocks. Um, Things like oil and gas and durable goods kind of becoming stars of the stock market again. The collapse of NFTs and cryptos. And so I just think, like, if what the Fed is determined to do, what they're saying they want to do, is have people laid off their jobs and curb demand and keep economic growth relatively low, then, like, yeah, like, that sounds like a recession to me, right? So, like, when you ask, like, is a recession coming? To me, the Fed is saying, like, yeah.
Yeah. Okay, so there's a lot in there that I wanted to touch on there. So let me see if I can remember everything that I wanted to get to. But I think since you were talking about this like mostly last, I think that's one of the really like bizarre and surreal things that emerges when you start kind of paying attention to the way that like political trends intersect with these market trends, and how we're kind of at the mercy of this like free market Leviathan, and how it seems to respond to like misery, and how like anytime there's social spending, not any kind of spending, but only social spending that like helps people pay rent, buy groceries, the COVID stuff, like whatever the meager COVID bailout that like working people got, or the child tax credit, or any of these things, or low unemployment. Like anytime there's any of these forces going on, social spending, low unemployment, we get warned by these like robed clerics that interpret these mysterious mystic lines and numbers. We say, oh no, we can't have any of that stuff. It seems like anytime like anything remotely that a normal person would indicate as being like signs of like a healthy society, people having money to spend on rent and groceries and other items, people being able to find work easily. Most normal people would see like that seems like a healthy situation, but the people that control these trends and control these forces are like, no, that's no good. And that's something that's very kind of dark and disturbing about following this stuff.
Yeah, I mean, it's because, like, the Fed specifically is right when they say, like, we don't have any means to intervene in, like, labor supply or any kind of supply. That's true. The Fed specifically cannot. But the federal government as a whole could, right? They could intervene on the supply side of the economy, but they won't, right? Because this is why like they like cling to the idea that inflation is driven by wage growth in the spite of all evidence, in spite of any, facts that claim to the contrary. It's what they want to believe, right? It's the thing that like tells them that the way they do things is correct, right?
Yeah.
And so it has nothing to do with data or, being objective, which is what they pretend. It's just a story that they tell themselves about why things are the way that they are.
Yeah. Yeah. Very interesting. So, in talking about these collapsing tech stocks and the return of these more traditional forces in the market, that's kind of one question that's important, and Elon is tied into all this. The question is like, because we know that there's a tech bubble already, like I think we all understand that, like probably much more significant than the dot-com bubble of the early 2000s. I think the question though is, has that bubble burst already, or is that moment still coming? Because there's a lot of evidence that this tech bubble has already burst. You look at Meta and the massive failure of their whole metaverse idea, laying like their stock just absolutely plummeting. You have Amazon with these historic layoffs right now, and you of course have Tesla at the same time. Tesla being one of the main stocks that has pushed this bubble, that has made Elon to become the richest man in the world in the first place, based entirely off of like speculation and not really about any actual factors that we would traditionally associate with like being an industrialist or having a business. I think I saw a crazy stat the other day about Tesla, because we've been all waiting for the stock to drop below 100, right? I don't know where it's at today. I haven't checked in a couple of days. But I think someone pointed out that before the pandemic and before that injection of wealth into the market, it was only at like 38 or something like that. Like it was a fairly low number. And this has all been completely artificially inflated by the people that have been trying to manipulate the market in this way and by Elon himself. So how is that related to this like overall story about the economy? And yeah, I would say, what do you think about whether we're still on the verge of the tech bubble popping, or has it already popped and we're just not really the chickens haven't totally come home to roost yet?
I looked up before, actually, just to confirm what you're saying about their stock price. I just pulled up their stock on Google, and let's see, February. Okay, at the end of February 2020, yeah, their stock was $44.53.
Yeah. I was shocked to learn this, you know?
Um, yeah, so
Like it really drives home the extent to which this is all fake, you know?
yeah, because they didn't announce, it's not like they announced any kind of major innovative breakthrough. It's not like they actually had automated driving working. I don't even think they released a new model of car for like commercial availability in that time, if I'm not mistaken. I mean, they like did the thing with the Cybertruck, but you can't buy a Cybertruck.
No. And the launch of that was famously fucking disastrous anyways.
Yeah, so like, but so like in the financial news they referred to tech stocks usually as growth stocks. And the reason why they refer to them as growth stocks is kind of what you were saying, right? All the kind of speculation about them is premised on the fact that they're going to keep growing, right? That their eventual profitability, because most of these companies are operating at a loss, especially in certain sectors. That's the thing we can talk about with Amazon. So all of their profitability is really hinged on them growing to the point where they dominate the market, become a monopoly, and can set their own prices. That's really like kind of the idea that they're selling when they're like, oh, well, you have to buy tech stocks, or like people just believe like I remember like whatever like last year when I posted that graph of all the different tech stocks, somebody replied to me that tech stocks are like long-term bonds, which is like just simply not true, but I guess it's what people believe. um so I did look up actually what the 1 year difference in stock price was for the famous FANG. I don't know if you know about it doesn't really work anymore because all these companies have changed their name, but so, Meta has dropped 58%
Do
in the
you
past
have the
year.
graph? I can post it. I can put it on the.
Oh, I don't have the graph.
Oh,
I just
okay.
go on the Google stick the, like, top
Oh
like, I
yeah,
just
yeah,
type
okay.
in Tesla stock in Google, and then it has, like, the
Yeah.
kinda 0 display. Yeah, I should have probably, like, prepared the graphs, but basically,
Well, don't
like,
worry about it.
Apple and Google did the best, and even Netflix, which I had thought would be worse, like, around Apple, like, 22%. They actually make phones and cell phones and are very profitable, actually, so that's kinda makes sense, and then Google and Netflix around 35%. Amazon's dropped 40%, Meta 58%, and Tesla 64%. So, I mean, I would say a lot they've all taken a pretty big haircut in the
Yeah.
past year. So I would kinda say yeah, I would kinda to me, like, that bubble has kinda popped, the shine is kinda off of those, stocks, and, yeah, now everybody wants to, get into, like, oil companies and, like, commodity, which that's fucking awful that everyone's moving into commodities, but commodity has been, like, one of the only big, um, profit makers in the last year. Even bonds were, like, major losers last year.
Yeah. And so you also have to wonder too, like there's not going to be this endless supply of VC cash in Silicon Valley, right? If that's starting to be less of a safe bet, it's not going to be quite so easy for like these like con artists and hucksters and the Elizabeth Holmes of the world and the Elon Musk of the world to just like get access to this like unlimited trough of free cash to, you know, promote all their completely fake technology and fake ideas.
VC cash, right? I mean, like, the stock price represents, like, a huge influx of free cash, right? Like, when people are constantly, like, buying these stocks and driving the price up, that's a way for these companies to bring in cash that kinda offsets a lot of the losses that they're taking in from their actual services that they provide, which, again, like, do not make money, right? Like, Amazon, right, which has completely destroyed brick and mortar business, has like completely changed the way that the internet works. The only reason they make money is because of Amazon Web Services. All of their actual business of like delivering you packages operates at a huge loss. That scheme where they like look at what the best selling items are on Amazon and then make their own version, that is a huge loss for them. The grocery business that they just acquired with Whole Foods does not make them a lot of money.
And a lot of the package delivery stuff, like since the foundation has been publicly subsidized by like the postal service and these public companies.
Right. And so like, and Prime is like the Prime movies or whatever. Like they spent who even knows how much money on that Lord of the Rings show. They're not making money off of that, right?
Yeah.
So I mean,
that is wild.
This huge wave of layoffs that you're seeing in tech is because of that, right? These stock prices are way down. There's not really any like thought that they're going to go up anytime soon. And so like they have to lay people off. They like in Amazon they were saying mostly they lay people off in hiring because they're not going to be hiring a lot of people anymore. So I think yeah, these companies are going to have to come down to earth and actually figure out how to be profitable companies.
Yeah, line going down. I mean, it's funny you talk about Apple and how like novel it is that their like value is at least tied to the basic idea of earning a profit, which is just completely like alien to a lot of these companies, such as Tesla or a lot of these other tech companies. It's like, it's so bizarre how it's almost quaint that it's like, oh yeah, they're still doing well because they actually sell products and, you know, they make money. It turns out you don't need to do that in order to still have a hugely overvalued stock price and this hugely overvalued influence in the industry.
I wish I could remember the name of it. Apple is also crazy because they have like an asset management fund that also like makes them money. So they kind of have like a side business as like a in company like hedge fund, which is like another way that they make business.
Yeah.
Starbucks,
we gotta have side hustles.
Yeah, Starbucks has the same thing where like that whole thing where you use the app and you like put money onto the cards. They take that money and basically act like a bank with it, where they like do trading and like invest the money that you have on your card elsewhere. And Starbucks makes an insane amount of money on that, which is why they're pushing mobile orders so hard. Anyway, crazy. What these companies get up to is crazy.
Well, yeah, and in Canada now that our like public health system is like on the verge of collapse after so many years of austerity and you know all the issues that we've had, the way it's been chipped away at the social safety net. Now we have these private companies stepping in to be like, hey, we need to fill the gap with these like these random companies are getting involved. Like the telecom industry in Canada is getting involved in healthcare. It's so fucking dystopian. They're like, now that everything's on the brink of collapse, like these cell phone companies are going to step in and start opening health clinics and stuff. This is like the first stage of privatization happens. And it's like it's funny, but it's also scary to see what is happening in our society at the same time. Sorry to tell you about Canada, but
yeah, that is upsetting that you talk about Canada. I had hopes to get through the whole episode.
Yeah, I apologize.
Speaking of that cursed land. But yeah, I mean that's the first kind of stage, not first stage. We're several stages into austerity, but like you know, in the U.S., like we already privatized everything. Like we don't even have anything left to sell off. So like the like credit bubble was kind of, I guess, like what is going to be our response after that, you know?
Yeah. No, but like that's what like a lot of what we were saying earlier, like that's what's animating a lot of political discussion in Canada right now. That's why Pierre Poilievre is like becoming popular, speaking to these quote unquote like coffee table issues. And he speaks to these very real things that people are experiencing, the cost of housing, the completely astronomical cost of housing and the housing bubble in this country, while not addressing any of the real solutions and in fact benefiting from the real solutions because he's an actual fucking landlord. But then also he just ties it with spending. He ties it with like public spending and suggests that Trudeau is some kind of out of control. And that's why the inflation is happening. And so much of his rhetoric is like completely animated by these total fake understandings of how the economy works and this very neoliberal version of like how these systems work. And there's an audience for it because we're so brainwashed and we're so inclined to believe these arguments about the economy. That's why that's working, even from people that are like being screwed by the current system and could use a lot more more social spending, and he could use a lot more nationalization and these kinds of things that he rails against. But these very people are like, no, get the damn government out of the economy. So that's, and there's as we're seeing, there's a big audience for it. It's very depressing. It's just like your family budget. That's right.
Yeah, I hate that. Yeah, it is not like your family.
No.
Like, if your family could print their own money, then it would be like your family budget. But if that's not the case, if like every time you spent $1, you actually got $2 back in change, then it would be like your family budget.
Yeah, exactly.
I don't know. It's we can talk a bit more about inflation. I did take some notes from Michael Roberts' blog, The Next Recession. He had an article called Inflation, Wages versus Profits.
Well, yeah, please, let's do, because that's been one of the major economic issues that we're talking about. It's what we're all experiencing right now, into varying degrees. Like I said, there's a very specific understanding of inflation, what it is and what causes it, which is the very economics 101 version, which, as we were saying, many people believe to be complete gospel. But I would like to hear what your notes are and what your takeaway is about what's causing inflation and how it should be dealt with versus what is actually happening and what we're actually talking about doing.
Yeah, so again, this is just an article that I'm kind of paraphrasing that I read from someone else's blog. So if you think it's really smart, you should read his blog. But basically in this article, which is one of several that he has talking about inflation, he's talking about this analysis that the Bank for International Settlements, which I have heard in, I think it was in Bloomberg, called the Central Bank's Central Bank. So they are saying that the correlation between wage growth and inflation has declined over a recent decade. And at the present moment, right, it is currently near historical lows. So if you're tracking wage growth and you're tracking inflation, they don't have much to do with each other right now. But this idea, right, which comes from Keynes, it's a Keynesian idea that inflation is caused by quote unquote full employment, continues to be supported by people because kind of what we talked about before. It tells them what they want to hear, and it completely ignores the impact that the impact on prices by businesses that are trying to boost their profits, right? It acts like prices are this kind of natural, independently decided phenomenon in which businesses have no input, which is not the case.
Yeah, they're kind of they've come to a conclusion already, and they're working backwards from the conclusion and divining the numbers to justify what they already believe.
Yeah, exactly. And in cases where the data doesn't meet what they think, they just throw the data out, right? Because economists basically build these beautiful doll houses of what the world is like. And if anything ruins the aesthetic, they're just going to throw it away.
Yeah.
But so in this piece, Michael Roberts talks about Marx's pamphlet, Value, Price, and Profit. And this is where Marx is, again, arguing with some neo-Ricardian economists back in the day. And he's explaining that the price of a commodity depends on the labor time needed to produce it, but also the share of that labor time that goes to workers or the share of that labor time that goes to capitalists. And how much of that, what percent goes to workers and what goes to capitalists, is only a matter that you can determine through class struggle, right? Workers will have to struggle to get more of that share, and the capitalists are always going to be trying to push to get the most surplus out to themselves. And so he talks about since the Great Recession, the 2007, 2008, you've had high unemployment, you had a period of really high unemployment that resulted in just huge pressure on wages. So that by 2019, labor's share of income was at an all-time low. So right before the pandemic, labor's share of income of all the kind of prices of things that are being made is at the lowest that it's ever been. That's kind of where we're starting before any of this COVID stuff kicks off. And now during COVID, because of inflation, labor share of income and real wages has actually fallen even as unemployment is going down. So if my wages are actually going down as an unemployment is going down, then inflation can't be caused by wages, right? It has the share is not going to me. So who's it going to? It's literally going to the capitalists, right? It's going to their surpluses. Part of it is going to that. And then part of it is due to what happened during COVID was these supply bottlenecks, which resulted in crazy price increases. if you pull up like a price of container ships over the last 2 years, that explains like a good portion of why maybe some capital costs went up, because the price of a shipping container went from like, like $1,000 to like $10,000 in a couple of months, right? Um, and so he's explaining like how much something costs can you can break that price up into that separate it out into three basic buckets. One of them goes out to pay laborers, one of them goes into the capital that you need to make the thing, and then the rest of it is all markup or surplus that gets paid out to the capitalist. And so the Bank of International Settlement, it was either them or New Economic Policy, I can't remember who. They actually break down the inflation numbers, and they can get a number on how much of the price increase is going into which bucket. And so when they did that analysis, they saw the majority of the price increases went, guessed it, into the capitalist bucket. So it was like 54% of the price increases went straight to the capitalists. Another big chunk,
What
like
a surprise.
5%, went to capital costs, and just a tiny 8% of this increase went into wages. And so, you don't have to take my word for it or Michael Roberts' word for it. He pulled in some quotes from some CEOs and execs. So Hershey's CEO said, pricing is an important lever for us to drive growth. One of Kroger's high execs said, a little bit of inflation is good for business. And the Hostess CEO said, rising prices helps profits.
Yeah,
And
or
so,
the
like,
grocery profiteers here in Canada, like Galen Weston. Like they've just been
yeah,
making
we
an
know
absolute
they
killing.
bread prices with the help of Pete Buttigieg.
That's right.
So, and then
Fact.
that's kind of the last thing he talks about is like, in the short term, you could think, oh, well, companies are making money in the short term, but in the long term, if they have higher prices, they're going to like lose market share and people are going to buy somewhere else. But obviously, like in places where there's a really high degree of centralization in a certain product, like certain grocery stores, right? If there's only a few grocery stores chains, then like this problem only gets exacerbated, right? Because they can easily get away with price pushing. I know the guy that works at Kroger, and I know the guy that works at Publix, and I know the guy that works at Aldi's. I don't know. And we all kind of decide, like, all right, yeah, let's all raise our prices up. And then like we can all get away with making more money.
Yeah. It's amazing how, like, in our discourse and in media and politics, how, and people buy this too, how quick we are to blame workers and blaming labor for every single problem. Like we saw that with all the union stuff the other day, like a couple weeks ago, about these potential rail strikes, and all the economic fallout is always placed squarely on the shoulders of the striking workers and the fucking capitalists that are, making such immense profits from these industries are just completely escape any scrutiny. They don't get talked about. They don't get any hand-wringing pieces like, why are these people shutting down the rail system? Why don't they just pay the workers more? It's truly amazing, I think, when you start having these conversations and then you look around at our media and the way these things are discussed and how it's always oriented in this way. Whether it comes to that union activity, labor, rail strikes, or when it comes to inflation, or when it comes to social spending, we always blame working people. We always blame the people at the lowest part of the economic ladder, and the people at the top, time and time again, who also control the media and also control politics. What do you know? Completely escape all culpability and all scrutiny. It's really something else, isn't it?
Yeah, and it's crazy too. It just shows how lazy the media is too, right? Because like you're literally someone's telling you something and then you're just repeating it on the news. There's
Yeah.
no like attempt to even analyze the thing you're talking about or check whether the numbers make sense. Um,
Yeah. Well, if they believe something different, they wouldn't be sitting there,
yeah, true.
as
Rare
they say.
Chomsky W.
Yeah, it's true. Yeah. Um, or the Parenti version, they let you say what you like because they like what you say. Anything else? Anything else you want to leave us with? It's been great to catch up with you about this stuff, Red Scary. Anything else? Any final thoughts or any other thing that you took notes on? You didn't get a chance to talk about? What's your closing statement?
Okay, well, I don't know if I'm ready for closings. Well, maybe. So I did ask the finance sickos in the Discord. We do have my finance sickos thread has become a finance sickos channel as part of my eventual effort to take over the Discord channel
Huh.
by channel.
Yeah.
When Rob forgets about it again, we know that he will. But basically, I had asked them if there was anything that they wanted me to talk about. And there was this article, again, a lot of articles make a big splash in like Bloomberg or like the Financial Times, and then like they never make it into like a more normal kind of regular news. But there was this big article that came out in Bloomberg at the beginning of December that had kind of a splashy title. It was let's see, what was it? It was huge, missing, growing. $65 trillion in dollar debt sparks concern. That was the headline. And basically, like the bank I was just talking about, the Bank for International Settlements, was kind of doing one of their things where they look at like different kinds of risks that are present in the current economy, and they were kind of looking at this amount of debt that is in dollars that is kind of obscured from balance sheets because of kind of some like arcane regulations around the way that you have to track accounting for different kinds of assets and securities and stuff like that. Um, but basically, like, there's this thing called, okay, this is it's so complicated, like everything is, and it's like this very complicated thing could like crash the economy, so you have to try and explain it. There's this thing called
And that's by design too, so the plebs don't understand what's going on too, right?
Yeah, there's a thing called a foreign currency swap, which is basically like, you like go to a country and you just like exchange your money.
Yeah.
It's kind of like that. It's like I am a bank in um I'm a bank in Indonesia and I want to buy something in Canadian dollars. Let's say I want to like invest my money in a Canadian mining company. There's not going to be a huge like market to exchange Indonesian currency into Canadian dollars. So I'll probably have to go through some other currencies to get to the one that I want. So I may do one go from Indonesian currency to Chinese renminbi, and then from renminbi to US dollars, and then from US dollars to Canadian dollars. But the fact is, like a lot of banks all over the world, and a lot of quote unquote shadow banks, which are non-regulated financial institutions, they wanna make a lot of trades. They wanna buy a lot of things in all different currencies, and a lot of those paths pass through the US dollar because the US dollar is the reserve currency of the world. So there's a lot of markets that trade between one currency and US dollars. So you may have to go so there's a lot of these swaps that happen in US dollars. And basically what happens in the swap is like, okay, like I have fake money. I have Canadian dollars, which are fake, and I want to buy something that's real in America, which is where real money is. So I need to exchange my Canadian dollars for American dollars. So what I do is I find someone who has American dollars and I'm like, "Hey, I will buy these American dollars off of you for what the current exchange rate is under Canada. And in like a year, no worries. I'm going to get those dollars back to you, no problem."
It's going to
But
give
the
him a big
thing
bag
is,
of loonies and toonies, right?
yeah. And
Yeah.
I agree, like, okay, I'm gonna give you your dollars back. But the thing is I'm using the dollars to buy something else. So what that basically means is that sometime within the next like however long the contract is, 6 months or a year, I'm gonna have to go find dollars. Now most of the time that's fine. There's plenty of dollars. Like, I have something I can sell to raise dollars. There's not like a big crunch on dollars. So like that's fine, right? That's usually not a problem. But when they looked at how much of this kind of debt there is out in the world, the number that they came to was this number that's in the headline, which is $65 trillion dollars. Which, like, okay, that sounds like a big number. Like, is that a big number? It turns out it's like an insanely large number.
It seems large, yeah.
2.5 times the size of the US Treasury market, and it's 14% of the value of all financial assets across the globe.
Okay.
That's
It's pretty
the amount
big.
of money that's held that's dollar debt that's held, all over the place. So, like, okay, so it's a large number, so that's bad, and then a bunch of different places have it. But as long as there are plenty of dollars, that's no problem. But the problem is, well, what if there's not a lot of dollars, right? What if there's like, I don't know, a big pandemic that happens and everyone's trying to park their money in dollars as like a hedge, and it's actually very hard to find dollars. But I have to buy dollars, right? Because I have to give you I have to give you your dollars back. You're not gonna wanna hang on to fake Canadian money forever. Like, you're gonna want real money back. Um, and so basically, they're like, if anything happens where there's a squeeze on dollars, basically what you have to do in that situation as the foreign bank or as one of these non-bank financial institutions, you just have to sell whatever you have that will get you dollars. So, like, I could sell off I made so you'll people will just start selling off everything. And then that's the circumstance that leads to, like, a wider market collapse, right? Because I have to sell off whatever I have in dollars because I have to get my hands on these dollars to meet these contracts. So that's basically like they were like, "Hey, this could be bad," and it could, like, trigger, like, a complete, meltdown in the US financial economy, and therefore the global economy. So that's just, like, a fun story that's out there in the financial press.
Yeah, that is a fun story. And there's also the whole idea of, when they were talking about Lula earlier and the role that Lula and Brazil have played in BRICS and creating these alternative global economic systems, getting away from the dollar and getting away from the sort of Western hegemonic version of the economy. I mean, that's a whole other storyline to this, right? How that shift right now is animating so much about like what we're seeing in geopolitics in Russia and Ukraine and elsewhere. And how much the U.S. is kind of really struggling against those shifts happening. Do you think that kind of a transition is going to have I know it's going to have I think a positive effect on a lot of people around the world that have been kind of crushed under U.S. influence in order to, ensure that they have full control over the global economic system. But what is this kind of like shift in this kind of geopolitical landscape and this new economic system that's emerging? What effect is that going to have on like our market and like our, the economy that we live under here?
Be really devastating for the US economy and specifically the US dollar. Number 1, the US is like a huge import economy. They import a lot of stuff.
Yeah.
And so anytime that your currency gets very weak, if you're an importer, that's pretty bad, right? Because it
Yeah.
means it's really hard for you to buy stuff.
Yeah, especially when you've offshored all your manufacturing industry to places like China, which is now using those productive forces to routinely kick your ass. And we have Trump saying this, we have Biden saying this, we're going to bring manufacturing back to America. But like in the system that they themselves have created, it's not quite so simple anymore, is it?
Yeah, I mean, the amount of, like, direct government expenditure they would have to do to actually reshore manufacturing, like, they can't stomach that, and there's not enough look at, like, what happened with Southwest, right? Like, they completely bailed out the airline industry. They just gave them a bunch of money, no strings attached. And did Southwest Airlines do anything productive with the money? Did they
Yeah.
improve their systems? Did they No, they literally did a did a share buyback and paid out dividends to stock owners with the money.
Amazing.
So, I mean, like, they can give all the grants that they want. They can, like, give all the tax incentives that they want. I keep talking about those Western Texas oil companies that, like, won't do more drilling, no matter what the price of oil is because they wanna keep paying out dividends to investors. The investing and, like, the profit making all of these things, it is really like a cancer that grows on your economy that, like, it makes you completely unable at these levels, right? It makes you completely unable to reproduce society, because 'cause you're just sucking everything out of it like a vampire.
Yeah,
Um
kind of like what giving the capitalists the rope to hang themselves. I think something was the quote, something like that, right?
Familiar.
Yeah. Somebody said that. Somebody important.
Yeah.
Look into that.
Yeah, that's
Yeah.
the only, like, most recent thing, like, I don't know that anybody wants to hear about the London Metal Exchange nearly, going insolvent back in March of last year. That was a funny thing that happened, but,
Well, let's hear
um
about it.
okay,
We
so
got time.
I thought people might enjoy the name. So this was in, like, a roundup in the Financial Times, of 2022, different things that happened, and they called it the London Metal Exchange Nickel Pickle. So
Oh,
I hope
Jesus.
all you freaks enjoy that. Um, and then the line right under that is them talking about nickel. Now this I enjoyed. Nickel, usually a humdrum commodity used in stainless steel with a sexy growth story for use in electric vehicles. That's right. That's what's sexy to the writers of the Financial Times.
Yeah.
But anyway, so typically the nickel price,
Absolute weirdos.
the nickel price is like around $15,000 per ton. That's just what it usually is. But in March, it like surged in one day, went from $15,000 per ton to $100,000 per ton, which is an increase of 280%. So pretty big. And what happened is that basically you had the Russian sanctions, which made people kind of like have a fear of like what was going to happen to like nickel supply. And then the world's largest stainless steel supplier, Singshan, had made a huge bet that the prices were about to fall. It's very similar, actually, if you remember what happened with Robinhood and the GameStop short squeeze.
Yeah.
And much like that, where Robinhood had to like close their app and stop people from trading, the London Metal Exchange had to completely close down their exchange, suspend and cancel billions of dollars in trade. And people were like, "That is crazy." The London Metal Exchange is like the benchmark that they use for all metals trading, pretty much. They've never had to shut it down or cancel trading, and they're like almost 150 years old. So they got sued, right? Because all these some hedge fund like lost a bunch of money because they canceled their trades. Because they were like trying to like a short squeeze is basically like, oh, I see somebody has bet a lot of money that the price of this is gonna fall, which means they're gonna be forced to buy this back no matter what the price is. So I'm gonna run the price up really high, knowing that they're gonna have to buy it all back, and I'm gonna make money. That's what a short squeeze is. So it came out through this legal action that the hedge fund took that yeah, like their clearinghouses, which basically like handle all the payments because the prices had gone up so high, the amount of cash that they required to do the trades was going to cause those clearinghouses to become insolvent. And it could have just completely like crashed the London Metals Exchange, which again, if that happens, that's like an economic meltdown, right?
Yeah.
This is another one of those cases where it's like you really came within like inches of like complete financial collapse, which was only stopped because they were like, yeah, fuck it. Like, we're just going to lose all these people billions of dollars.
Yeah. That is a cool story. It's funny how precarious everything is. That's such an example of it. Like how on the verge of collapse all these systems are. It's like this creaky, leaky, rusty old ship that's somehow still afloat after all this time.
Well, it's specifically because of all the like all the debt that's like out there from when debt was really cheap, and all these strategies that people had like around like investing on debt and investing with leverage and stuff. Yeah, now that you can't just like buy your way out of any problem by borrowing really cheaply, like yeah, everything is like very shaky actually.
Yeah, it certainly seems that way. So, like, are you ready for do you have a final comment now? Like, how fucked are we?
I think that's all the fun stuff I had, 'cause just again, the guilts thing was also a leveraged. That was the thing that happened because of people trading on leverage. So I would just say like, I don't think the Fed I don't know. Like I said, I always think that a recession is coming. I always think a recession is coming. I think the
Same.
Fed is gonna keep pushing interest rates, like, because unemployment has literally been at 3.5% since, like, March, like, at least since April of last year, it was at 3.5%. It hasn't moved at all no matter what the Fed has done.
Yeah.
And it seems like when something collapses because everything is kind of held together with, like, random debt obligations and, like, pieces of gum, um, that, like, if one thing falls, it's not gonna be, like, this kinda controlled demolition, like a couple of towers I could name. It's just gonna
Yeah.
be, like, a complete meltdown, because of, like, how fragile this kind of web of debt obligations and payments has become.
Yeah.
So, I just anticipate like when it happens, when something like London Metals Exchange breaks loose, or this like foreign currency swap crisis breaks open, like it's not going to be able to be contained. Um, so,
Well, and you got to wonder
I
too
don't.
if the whole Bitcoin thing is going to continue, because there's still these exchanges that are operating that are like, it's like, oh, now that these scam exchanges are gone, now the real ones are going to continue. It's like, no, they're not going to get, like, it's only just a matter of time before these other big exchanges start suffering the same fate.
Well, didn't today the SEC like do something with the Winklevoss's crypto project? I didn't look into it too much because I was looking up stuff for this, but yeah, I mean, I think like the crypto thing is toast. Like the SEC is like finally decided like that they're done with it. And when they decide that they're done with it, like it's over for you. Like
Yeah.
you're because they actually do have the power to regulate you out of existence. It's just we forget because they never do that.
Well, that was the whole funny thing about Bankman-Fried and crypto, saying like, oh no, get those regulations out of here. We don't want any oversight. We don't want anyone. And then as soon as like they all start losing billions of dollars with these obvious scams, it's like, where's this regulation? Where's the government? You know, it's like they can't wait for a handout or a bailout to fix their dumbass ideas and their dumbass decisions.
SBF didn't want regulation. He was running his books the same way like your doggy daycare down the street runs their books. Except he was handling billions of dollars of like cash every day.
Amazing. We love it. I got to start a crypto exchange.
It's too late for you.
Yeah.
There's
a bonanza.
You missed the heyday.
That sucks.
Yeah. And as we know, FriendCoin is real.
Yeah, very real.
So
not a scam. That's right. So I still got that. Yeah. Well, Red Scary, thanks so much for coming back on the show. It's great to catch up. I'm glad you could break this stuff down. You want to just say goodbye to everyone?
Goodbye, everyone. Thank you for listening to me ramble about things I read in the Financial Times. As always, do not follow me, but join the Discord. And come to Theory Book Club. We are finishing Caliban and the Witch next time. And we're going to be starting on, I think the next thing we're reading is going to be towards a scientific analysis of the gay question, written by a group of LA lesbian communists in the 1970s. So that sounds interesting to you. Get in that Discord, get in the book club, and I'll see you guys in the chat.
Yep. And all the stuff about a takeover was none of that was true. It's all just a bit. It's all just a bit that we're doing.
That
was a big joke.
A bit. It's not real, and we should not deploy those plans that we had because, again, they don't exist.
Yeah, exactly. Thank you for clarifying that. Thanks again, Red Scary. I'll talk to you soon.
Bye.